Hello everyone, welcome back to Commodity Updates. India just made gold and silver more expensive to import, and there's a big reason behind it. The import duty just jumped from 6% to 15%. That's a 150% increase overnight. So what's going on, and what does it mean for you? India has raised the import duty on gold and silver to 15%. Here's how it breaks down. 10% basic customs duty, plus 5% agriculture, infrastructure, and development cess. That's the new structure, and it applies to all gold and silver coming into the country. 3 reasons. Let's break them down fast. Reason 1. India's Forex reserves are under pressure. High crude oil prices, geopolitical uncertainty, strong demand for imported goods. All of this is draining India's foreign exchange reserves. Reason 2. Gold imports are hurting the trade deficit. India imports nearly 100% of its gold needs. Every gram that comes in means more dollars going out. That widens the trade deficit and weakens the rupee. Reason 3. Protect the rupee. By reducing gold imports, India aims to reduce dollar outflows, which directly supports the value of the Indian rupee. Here's what's interesting. Right before this hike, gold demand in India was actually surging. According to the World Gold Council, inflows into Indian gold ETFs jumped 186% year-on-year in the March quarter, a record 20 metric tons. So Indians were buying more gold than ever, and now the government is putting the brakes on. The higher duty will weigh on domestic demand, especially as prices are already near record highs. And it wasn't just a tax hike. Prime Minister Narendra Modi personally appealed to Indian citizens, asking them to avoid buying gold for 1 year. The goal? Conserve India's foreign exchange reserves. In a country where gold is deeply woven into culture, weddings, festivals, and savings, that is a very significant ask. But there's a risk. Industry experts are warning that higher import duties could bring back gold smuggling, which had actually eased after tariff cuts in mid-2024. When the price gap between India's domestic market and international markets becomes too wide, gray market channels activate. Illegal imports through unauthorized dealers. This is a challenge that regulators and the organized bullion trade will need to watch very carefully. Now zoom out. This isn't just a tax policy story. This is part of a much bigger global shift. Right now, gold and silver are flowing into Asia at a historic pace. Central banks in India and China are accumulating hard assets at double the decade-long average. India's central bank alone added 73 tons of gold in 2024. And gold in India is trading at a premium over international prices, meaning Indians are paying more than the global rate because demand is that strong. Raising import duties is India's way of saying, we need to manage the pace of this inflow to protect the rupee while we accumulate. It's a balancing act between currency strength and hard asset strategy. So here's the takeaway. India has raised gold and silver import duty from 6% to 15%. The goal? Protect Forex reserves and support the rupee. Risk: higher duties could revive gold smuggling. Bigger picture: India is navigating between currency stability and hard asset accumulation. This is economics, this is geopolitics, and it's happening right now. If this video helped you understand what's going on, hit like, share it, and subscribe. More videos like this are coming.